Hi, this is Joe Kehrig, and this is your San Ramon Valley update. So, what's going on with the market? You're seeing listings stay on the market. So we're going to talk about two things. Are sellers frustrated, or do sellers really understand? And then also, what is the second half of 2026 look at? Well, number one, you can see right here, are sellers giving up the rise of delistings? So what delistings are is when a listing's on the market and it comes off. And you can see these headlines. Sellers are pulling homes off the market at the fastest pace since 2020. MAP reveals where American home sellers are pulling their homes off market. No offers. You see these headlines all over. What is really going on though? Nationwide, 5.8% of all U.S. home listings were taken off the market in April. That's tied with December 2025 for the highest share since March 2020. Remember COVID, March 2020? When the onset of the pandemic ground the housing market to a halt and spooked the sellers. Prior to 2020, delistings were never as common as they are now. And I'm going to tell you why. It's because of the disconnect to where the market is and what the sellers think it is. The three forces reshaping today's real estate market. One is recent inventory growth. Inventory is growing, shifting prices. Obviously, everything supply and demand is as you have more supply, even if you have the same demand, prices are going to fall a little bit as you have to lower the price to get their home sold. And then the third thing, longer days on the market. And that's why you see a lot of sellers delisting their home. I'll tell you, my feeling is people are talking about, hey, should I wait till next spring? No, put it on now. Get what I like to call 2 bites of the apple. Put it on now, and if it doesn't sell, then you can always relist at the beginning of spring. Take 2 bites out of that apple instead of waiting until the spring, and who knows, maybe like this spring, we expected the market to be better, but with the tariffs and with the war, interest rates going up, it was actually worse than it was during this time last year. Look, inventory has been rising for 4 straight years, but here's the thing when you look at it. Here's 2020, and then you see the arrow going up. So they've been raising the last 4 years, but look at what we consider the last normal market, 2017, 18, and 19. The market is basically, we're still less than we were back then, what we consider the last normal market. And this is the disconnect. 80% of sellers think they'll get their asking price or more. Look at 37% think they'll get more than they're asking. Almost 47% think they'll get their asking price. But what is the reality? Look at this, 62% of the homes are selling for less than asking. And you see that number going up all the way since 2021 from 38 all the way to 62%. So there's the disconnect. Sellers, 80% think they're gonna get their asking price or more. And really, 62%, get less than their asking price. So only less than 40% actually get their asking price or more. And homes are taking longer to sell. You can see going up. 2020, it was way high, because remember, we were basically frozen for 3 or 4 months. And then it went the lowest 2022, but steadily been going up. So homes are taking longer to sell. And hence, the sellers disconnect with the prices, still thinking their home's worth more than what it is. So what's coming for the housing market in the second half of 2026? Here's the good part. Inventory gains are losing momentum. So you saw basically that listings went down, down, down. Now they've been going up, up. You can see the inventory gains are losing momentum. In other words, homes, as people delist homes, it's not that less homes are going on the market, but the sellers that aren't motivated or don't have to sell are pulling off. So the actual inventory gains are losing some momentum. And when you look at NAR, Fannie Mae, MBA, the Mortgage Bankers Association, everyone feels that prices are still going to go up overall. And we're seeing that. And you'll see when we look at the graphs for the different San Ramon Valley cities that homes are still selling around 100% of asking, but those are the ones that are selling. A lot of them are obviously staying out there on the market. Mortgage rates are expected to remain stable. You can see that both Fannie Mae, MBA, and Wells Fargo all feels that they're going to stay about the same, 6.4 now, and they got between 6.3, 6.4, 6.5. So expects the rates to stay pretty much the same. And what's making the rates go down? You can see this in more of a box mode, Fannie Mae, MBA, and Wells Fargo. And you know what? If this goes all the way to next year, Q2 of 2027, you can see very little changes, if hardly any at all, they expect in the next year. What is keeping oil prices, oil prices, yes, are high. That's what's driving the interest rates higher. You can see falling oil prices do affect the interest rate. The problem we have is the Iran war is on, off, on, off, on, off. And it's literally, you've been seeing mortgage rates go like this because look at these, look at where obviously it was in 2026, and you can see that the graphs basically follow. As oil prices go down or up, interest rates follow. When you look at these three graphs, you can see there's a history, average oil prices versus 30-year fixed rate mortgage. And the white is the oil prices, the 30-year fixed rate mortgage, and you can see they follow, not side by side, but for the most part, they do follow. Why? Because higher oil prices normally means there's inflation. And when there's inflation, the Federal Reserve will keep interest rates or raise them. So oil prices are almost an indicator of inflation out there, especially now with what's going on with Iran. So you can see as oil prices go up or down, and you can see all of this going on because that's what's been happening with the war. It's on, off, on, off. So, but here's the other good part. Not only is the momentum of inventory settling down, but more buyers are saying yes, and that's great news for the rest of 2026. Look at these graphs, 2024, 25, and 26. You can see these are pending home sales, so it's definitely a good situation. So we're seeing inventory settle down, more buyers are out there in the market purchasing, so obviously that's all good. So how's our market doing? Well, the one thing we saw a real drop last week of activity, of active listings. Remember, we talk about active, a normal market is where there's about 25 to 33% of pendings compared to actives. And we're there in almost all of our markets. Now, I will tell you, San Ramon's a little low, but what happened a couple weeks ago with the 4th of July holiday, we saw inventory, and you can see last week, inventory went down, but now what we're seeing, inventory jumps right back up once the holiday's over, but pending sales are going down. So again, that big gap, San Ramon is around 20%, so it's trending into being a buyer's market, but still pretty normal. Danville, same thing. You see pendings going down, inventory going up. And again, that's normal because the reason it went up, because 2 weeks ago, inventory went down, and now pendings almost trail inventory by a week. So we'll see what happens next week. Same thing with Alamo. The pendings are up a little bit, but the listings are way up. And the Dublin market, same thing. Pendings down slightly, inventory up slightly. So that's kind of where our market is. But when you look at it also, we also run, we've expanded it a little bit more. We have the Livermore market where you see the same type of thing, the Pleasanton market. The one market that's very hot is Castro Valley because the San Francisco market's on fire. And as you get closer to San Francisco, the market stays hot where you have literally more than 50% pendings actives. So it's really in Castro Valley, it's a seller's market. But look at the sold to list price. Everything's around 100%. Everything's taken about 3 weeks to sell, any place of 3 weeks to a month. So that's our market. But again, those are like 20%. If you have 10 homes on the market, you've got to be number one or number two to have the best chance of selling. So homes are selling, you just have to be priced right. And every neighborhood's a little different. So if you have any questions at all about your particular home and your particular neighborhood and your particular area, this is kind of a broad brush. So give us a call, give me a call, and we'll basically just sit down and have a consultation with you to tell you where we think the market is, where it's going, so you can make the best decision. We give you the pieces of the puzzle that we can to go along with all of your pieces of the puzzle so you can make the best decision possible for your family. Joe Kehrig, my cell number is 925-487-6838, or drop me an email at joe@kehrigteam.com. If you want to learn more about the Kehrig team, www.kehrigteam.com. The next couple weeks we're going to really see how the market flows. Stay tuned.